Our next guest is expecting an unremarkable shopping season ahead. Joining us is Michael Lasser, UBS broadline and hardline retail analyst. Here's what I always wonder on Black Friday. How indicative is the traffic and spending of Black Friday and Thanksgiving weekend of the entire holiday season?
What it is it's highly sensitive to being a false positive indication. The season's long, and the last few weeks immediately prior to Christmas are going to be very important. Overall, what we're expecting is modest growth this year, but it's going to be very uneven and inconsistent. And what's happening is, much like many of us are experiencing a digestion period from yesterday, the consumer is experiencing a digestion period from over-consuming TVs and household appliances and toys from the last few years. Plus, they're shifting their spend to experiences. And as a result, we're going to see more volatility, more unevenness over the next few weeks.
So in terms of categories within overall goods, if goods are still less prioritized than experiences, what works?
What works is beauty, certain areas of the footwear complex, hydration, believe it or not, is going to be in demand.
That's a category?
Hydro flasks, coolers, those types of...
What stocks do you like on hydration?
Yeah, well, Dick's Sporting Goods has been seeing a lot. Another one is Five Below. Five Below is a teen dollar store that is at the right place at the right time, given that it offers value and convenience, inexpensive goods. That's a stock that we like to play the holiday.
Does the old school playbook regarding the discounters start to work again?
The old school playbook is once you see the eyes of the recession, that's when you want to move away from the discounters to the more pro-cyclical names. Things like a home improvement, home furnishings, because at that point, rates are going to start to come down and the consumer is going to be more incentivized to consume. And so we're getting closer to that point where you're going to want to move away.
But what if we don't have a recession? What if boomers like David will have sitting on his 2% mortgage?
She didn't get to it earlier. I knew she was going to hit it at some point.
You mentioned your mortgage rate.
The older generation.
Good for being a boomer.
Thank you. I'm not. That's why I look better. But she likes to say I am. Sorry, I didn't mean to interrupt.
My point is, it's not necessary. It's not necessarily assumed that we're going into recession, even if we're slowing.
It's not, but at some point rates will come down, and that's what will stimulate demand for these bigger ticket purchases that will benefit the likes of Home Depot, Lowe's, Best Buy, etc. And at some point, you're going to want to make that pivot.
The other big story in retail all year long has been shrink and just sort of inventory management, execution. Do you think that's been oversold as a thesis of things that work against these stocks?
So I don't think it's been oversold. We've been through quite a dramatic period for retail in the last 4 years, and shrink is one of the lagging indicators of that period. It's also proven to be cyclical over time. I think you're going to want to be long retailers who benefit from shrink coming down. Target is a name that stands to be a significant beneficiary of shrink getting better as we get into 2024.